Like to start off each week with a summary of what I saw happening in the stock market. And it's been a really fascinating week, right? I mean, the
Mhm.
market is up pretty substantially. They closed the government, on Wednesday.
Yeah.
Market's up Wednesday. Market's up Thursday. So far today, it was barely up last time I looked, but it wasn't down. It was up a little bit. So, you know, the impact of at least the immediate impact of the government shutdown wasn't really there, right?
Mhm.
And I think it's because, like we talked about in the past, it just doesn't have a big impact historically.
I think the market was pretty prepared for it. Most of the
Yeah,
I think most people understood there was gonna be a shutdown. It wasn't like it was unexpected.
right. And so the basics are still there. You've got this, the positive side, you've got the AI trade and the spending being spent on AI. You've got lowering interest rates, and you've got a situation where, you could have some deregulation, and, all of these sides are kind of pushing the market forward. And then on the other side, of course, we've got the, tariffs that could have some impact, the deportations, and really the independence of the Fed. So that's still the same. This is the teeter-totter balance. So far, obviously, the positive side's winning, right? I
Mhm.
mean, we're seeing the stock market hit new all-time highs on a regular basis, and a big part of that is because the things that might bring the market down are actually delayed, right? So that's coming later, and normally the market's looking at that, but unfortunately, we just don't know what is delayed. What's going to actually happen? Does the Supreme Court take tariffs away? Do they have other avenues, which they do, to put up tariffs? How do those work? Do tariffs stay up? Historically, when you get this high, tariffs don't stay up. So maybe they're looking past this bump and seeing tariffs come back down because, again, normally they don't stay up, whatever it might be. Yeah. So there's the positive side is definitely winning. One of the things that also happened from this government shutdown today was supposed to be the jobs report, right?
Yeah,
It
for the
was,
Bureau of Labor Statistics.
yeah, and yeah, yesterday was supposed to be first time unemployment claims, which we didn't get either. So I've been saying for a while since they fired the head of the Bureau of Labor Statistics because they got bad numbers that we really need to find other sources outside the government anyway to see what is happening as much as we possibly can. Because now you've got to question whether or not the numbers that are coming out are real. Even if they are, you still have to question it, right? Just because of the way that went down. So that's one of the problems with doing that. But so one of the things that came out today was the ADP employment report. And so this is there we go. So we can see the timeline. This is going back a year. And so this is a private employment,
Mhm.
right? And it's the ADP is a payroll servicing company, actually. And this comes out in the same week, usually a day or two before
Yeah,
the
usually.
big report from the Bureau of Labor Statistics, which always comes out on a Friday. But if you look at this, the thing that strikes me very much so is started plateauing in March, which is right when the first tariffs kind of started. Remember, it was Canada and Mexico at first. I think that was actually even in February. And then, Liberation Day and all the other things that have happened, it's flatlined. And the report that came out for last month, that just came out this week, we had 32,000 less jobs. So that was kind of a big deal because there was actually an expectation for, I think, 30 to 50,000 new
Yeah, and then
jobs.
they also revised August down to negative too.
Oh, they did? Okay, I didn't
Yeah.
see that part. So, yeah, and that's probably reflected in this this chart. And so that's what's happening there. The labor market is getting soft. Now, this is private employment. This probably has a lot more of the small businesses in it than the big report that comes out, which includes public companies, includes the government, right?
Yeah.
And so that's important to understand. But I think maybe the small business is the first place you want to look for impact of tariffs, in my opinion. So if this is a good report to look at. So we're seeing softness in the market, and when this report came out, the stock market went up. Right, there was other things happening. There's been a lot of positive AI news this week.
It's just reinforcing the there's gonna be rate cuts for the rest of the year paradigm, and
Right.
so that's where people are kind of, "Okay." Everything news that reinforces that thought is kind of positive for the market.
Yeah. Yeah, exactly. So that which, there's a bad news is good news at the moment, right? Until it isn't. And we've talked about that. And so the other thing we want to watch, because now we're gonna miss some inflation reports because
Mhm.
the government's closed. And we've been a little suspect of those anyway. So that's the wholesale inflation. It's the CPI, the PCE, all these reports that we get from the government. And so this is a commodity index. I've been bringing this up for the last few weeks. Actually, this week commodity prices, at least within this ETF, came down. Even yesterday closed slightly below that trend. Back up again today a little bit. Uh, Overall trend still up, no doubt. That's pretty obvious to me. But short-term trend this week. So you got this week. You had falling employment potentially from the one report we could see. Again, the market like that, they see falling commodity prices here, market likes that, right? So you can see why this turned out to be a decent week as far as that goes. So those are some. I'm trying to keep this fairly straightforward and fairly short, kind of the things that are really, the focus. It's labor, it's inflation, and it's AI, right? I mean, if you're going to pick top three. And so just a quick little piece here on the AI and why people are so excited about it. So first of all, the total spending or investment last year was 252 billion, right? It's a lot of money, but that's 13 times higher than it was 10 years ago. So it's growing really quickly. And then they expected to reach 4 trillion. Okay, that's a analyst guesstimates, right? But 4 trillion in 5 years, if that actually happens, that's basically what 16 times where we are today in 5 years. So it's obviously ramping, yeah, and
Yeah.
so people can see that. Now, whether this is something going to work or not, I mean, these are some pretty smart people with some companies that are very successful. They're seeing something. Yeah,
Mhm.
they're investing in it. So I I don't know. Are they all wrong? I doubt it, actually. I bet you that something comes out of this. Again, this reminds me a lot of what was going on in the dot-com time frame. So, and then what they're doing with that money is they're doing infrastructure build out, almost exclusively these massive data centers and hardware that they need to build those. And energy is a big one that
Mm.
fits within that because that seems to be maybe one of the bottlenecks. So we're starting to see energy companies doing really well.
Yeah, but it takes time to build energy or
Oh,
any kind of power generation. And so I think a lot of people are gonna just general people are gonna feel a brunt of it,
yeah, very much so. I think
it's more
the
expensive.
AI has a chance to kind of soak up some of the energy cost, some of the, so much energy that everybody else still needs it and they can't build it out as, it takes time to build it. Although there are some things they're looking at that are interesting, but once those data centers are built, it's 15 to 20 billion a year to refresh the hardware. So you can see why a company like Nvidia and these chip companies and people providing, things towards these data centers are really doing well. Because there's the software that's going in there. There's an ecosystem here of money that's going to be done. And I guess, training AI, which is what they're going to do with these big data centers, is a $1 trillion opportunity, essentially. So it's pretty incredible. So anyway, that's why the market is doing so well. Of those three things, yeah, employment's getting worse. There's no doubt, whatever the reason is. And then you look at what happens with, inflation. It's been it's worse, than it
Mhm.
was. Not a lot, but it's heading in the wrong direction. Stock market's going up because this is overdoing those two pieces, right? So there's more money coming into AI that's more exciting to people. Um, and again, I'm simplifying. There's lots of things going on, but in essence, I think those are the big three,
Yeah.
right? Right now, the capital spending going into AI is more exciting and more impactful than the parts that are, on the other side, which is inflation and labor, right? And so that has to do with what the Fed's going to be doing with it and what type of impact tariffs have, what type of impact deportations have, what type of impact inflation might have,
Mhm.
on that side eventually, right? So uh, those aren't really manifesting themselves at a level that is enough to scare people off from getting into the stock market, right? So I think you have a pretty good run left in this thing before you might have some trouble. I wouldn't be surprised to see a 20 to 50% higher point before you get to a peak. That would have lined up pretty well with what happened in the dot-com arena. I would say the one caveat is we don't know the real impact. So if the impact of tariffs is really detrimental and we can't see that yet, but What if it is, right?
Mhm.
Could be. It has been in the past, so could be again. If the impact is deportations, or how about the independence of the Fed, right? So what happens next May? They put somebody in and start ratcheting rates down really fast, and the market doesn't like it. So there's things that are out there that are potentially in the way of that 20 to 50% run that we would have. And so that's where you want to be a little cautious, in my opinion, still, and keep some on the sidelines, just because, again, in that 2000 run, we went more than 20 to 50. It was more
Mhm.
like 100% from where we are now. And before it really blew off and topped out, this one has these extra headwinds that weren't there. So
Yeah.
that's kind of, for me, just looking at historically and what I've lived through for both of these. And I remember all the downturns like they were yesterday. I remember a lot of the details. And so, you learn a lot from those. And so this one is a lot like the upside of the dot com with a few different caveats and the headwinds. Yeah. So that's kind of where I'm at. Anyway, look forward to being able to cover, this again next week. But